Former President Donald Trump's new media venture plans to launch its social media app Truth Social on February 21, according to an Apple Inc. App Store listing. Truth Social, the Trump Media Technology Group alternative to Twitter, is available for pre-order before going live on the U.S. President's Day holiday. Similar to Twitter, the app offers features to follow other people and trending topics, according to demo photos. The app's launch would come 13 months after Meta Platforms Inc.'s Facebook and Twitter banned Trump for encouraging his supporters to participate in the January 6 attack on the U.S. Capitol based on unsubstantiated claims of widespread fraud in the 2020 presidential election. Marking the one-year anniversary of the attack, U.S. President Joe Biden said on Thursday that his predecessor's false claims could unravel the rule of law and subvert future elections. TMTG and Apple did not respond to requests for comment, but a source familiar with the matter confirmed that February 21 is the planned launch date of the app. The launch is expected to be the first of 3 stages in TMTG's development. The second would be a subscription video-on-demand service called TMTG Plus with entertainment, news and podcasts, according to the company website. A November investor presentation indicated that TMTG also wants to launch a podcast network. TMTG is currently valued at $4.3 billion based on the stock price of Digital World Acquisition Corp. TMTG agreed in October to merge with the blank check firm at a valuation of $875 million. Trump supporters and retail investors have snapped up Digital World stock, betting that Trump's popularity with his Republican political base will translate into commercial runaway success. The blank check acquisition deal faces regulatory risk. Democratic U.S. Senator Elizabeth Warren asked Securities and Exchange Commission Chairman Gary Gensler last month to investigate the planned merger for potential violations of securities laws around disclosure. The SEC has declined to comment on whether it plans any action. TMTG last month raised an additional $1 billion from private investors. Trump canceled a news conference at his Mar-a-Lago estate in Florida that had been scheduled for January 6, marking the one-year anniversary of the Capitol attack. He said he will instead deliver remarks at a rally in Arizona on January 15. General Motors on Thursday said a trio of chips from Qualcomm Inc. will power the Ultra Cruise driver assistance feature on a luxury Cadillac sedan next year. The Qualcomm chips will provide the computing power for the all-electric Celestiq, the company's planned flagship sedan. The automaker says that Ultra Cruise will allow for hands-free driving on both surface streets and freeways to account for up to 95% of roads in the United States and Canada, going beyond GM's current Super Cruise feature that only works on highways. It's a supervised system, so you still have to pay attention. But essentially what we're doing is giving the driver a hands-free experience in a much larger domain, said Jason Dittman, chief engineer for Ultra Cruise. At the heart of the system will be a computer about the size of 2 laptops sandwiched together. GM will provide the software to make the system work, and Qualcomm is providing key chips, 2 processor chips, and then 1 chip designed to speed up specific functions. The deal is a milestone for Qualcomm, which dominates chips for mobile phones and has been diversifying its business. While Qualcomm has numerous deals with automakers to provide chips for infotainment centers and 5G connectivity, but GM is the first automaker to use Qualcomm's Snapdragon Ride chips for self-driving features. Qualcomm is competing against rivals like Nvidia and Intel's Mobileye to win deals with automakers for self-driving chips. The energy efficiency of the chips is a key requirement for automakers in electric vehicles, where computers must compete for limited battery life with the drivetrain. Qualcomm has aimed to use its history making chips for phones, where battery life is a key selling point, to lure automakers. GM's Dittman would not disclose how much power the Ultra Cruise computer uses, but the device is air-cooled, meaning the chips likely consume less power and generate less heat than rival offerings that need liquid cooling. We're very conscious of what our power consumption is, Dittman said. Cineplex Inc. is temporarily laying off 6,000 part-time employees due to mandated closures of its venues amid surging COVID-19 cases caused by the Omicron variant, the Canadian cinema operator said on Thursday. Globally, coronavirus cases have been rising rapidly due to the highly transmissible variant. In Canada, 36,110 new infections were reported on an average each day, according to a Reuters tally. Due to mandated closures of Cineplex's theaters and entertainment sites across Ontario and Quebec, the company had yet again decided to temporarily lay off its part-time workforce, Cineplex spokeswoman Sarah Van Lang said. Cineplex had taken similar actions for all provincial government-mandated closures earlier since the pandemic began, she added. Out of the 6,000 workers being laid off, 5,000 are in Ontario. The cinema industry has been one of the worst affected sectors by the pandemic, with lockdowns shutting cinemas and delaying movie releases at a time when the industry has been trying to stave off increased competition from streaming services. In December, the 2019 planned acquisition of Cineplex by British cinema operator Cineworld was scrapped. The layoffs were first reported by The Hollywood Reporter. Amsterdam, a group of institutional investors representing $3.5 trillion in assets under management on Thursday called on pharmaceutical companies to link their executives' pay to making COVID-19 vaccines available around the globe. While the majority of citizens of wealthy nations are vaccinated and many are now receiving booster shots, across the African continent vaccination rates average only around 10%. The World Health Organization has set a target of a 70% vaccination rate in every country by July 2022 in order to end the acute phase of the pandemic. The 65 participating asset managers, pension funds and insurance companies signed a letter viewed by Reuters dated January 4 that was sent to the boards of Pfizer Inc., Johnson & Johnson, Moderna Inc. and AstraZeneca plc. The letter asks them to adopt a WHO roadmap for achieving equitable vaccine access and tying it to management pay, in a meaningful, material, measurable and transparent way. Vaccine deliveries worldwide have been delayed by production problems, hoarding by governments of rich countries, export restrictions and red tape. The investor group said key points include better participation in international vaccine programs and licensing and sharing technology so countries can produce vaccines locally. It should make business sense for a vaccine manufacturer to aim to vaccinate the whole world, said Frank Wagemans of Achmea Investment Management, one of the backers of the initiative with $225 billion in assets under management. Other participating investors include Nomura, Investec, Boston Common Asset Management, Candriam, GM, Aegon and PGGM. Moderna could not immediately be reached for comment. A spokesperson for Pfizer said the company and partner BioNTech had met a goal to deliver 1 billion doses to low- and middle-income countries in 2021 and would do so again in 2022. Johnson & Johnson said in reaction that 60% of its vaccine has been shipped to low- and middle-income countries as of the end of 2021, and the company is in talks on a licensing agreement with Aspen Pharmacare to produce vaccine in South Africa. A spokesperson for AstraZeneca said the company has distributed most of its supply to low- and middle-income countries, and it does so for no profit in those countries. Peter Singer, special advisor to the Secretary General of the WHO, said the investor initiative was extremely welcome. The current unequal vaccine distribution represents not only a complete moral failure for the world but also a very significant economic failure and a significant drag on the world economy, he said. Achmea's Wagemans said he believed vaccine makers will generally be receptive to the request, but the fund manager will look at how the companies put promises into action before their annual meetings. I cannot speak for the other signatories as to how they will vote, but for Achmea management, yes, we will vote against if there's no link made to the WHO roadmap, he said. From personal music players to games consoles, Sony Group has often gambled in order to be a pioneer, but a leap into electric cars could take the risks to a new level for the Japanese consumer tech giant. While investors were wowed when Chief Executive Kenichiro Yoshida this week told a Las Vegas tech fair the company was setting up Sony Mobility, its stock fell 7% on Thursday as they contemplated the challenge of actually delivering EVs packed with sensors, consumer electronics and entertainment offerings. The primary goal of Sony-branded cars, analysts say, is to create an autonomous connected vehicle for services such as car sharing and ride-hailing, which could eventually outstrip automobile sales. Research firm Markets and Markets estimates that the mobility as a service market could balloon to $40 billion by 2030 from around $3 billion last year. But analysts point out that Sony would likely have to invest heavily in plant and equipment to bring its prototype Vision SEV, first unveiled in Las Vegas 2 years ago, to market in sufficient numbers to compete effectively. It's going to be a tough business to succeed in, Takaaki Nakanishi, automotive analyst at the Nakanishi Research Institute in Tokyo, said of Kenichiro's announcement. Industry leader Tesla Inc., which delivered its first electric vehicle in 2008, has plowed billions of dollars into revolutionizing the automobile industry, relying on the backing of investors as it navigated years of losses. Now an accelerating shift to EVs, as countries try to cut carbon emissions by phasing out the use of gasoline and diesel-driven cars, is likely to help tech companies because they are simpler to build than internal combustion engine vehicles. Sony is joining a growing list of major technology firms exploring automotive opportunities, including iPhone maker Apple Inc., South Korea's LG Electronics, and Taiwan's Foxconn, Nakanishi added. But for their vehicles to be deemed roadworthy, they would also have to comply with much stricter safety regulations than those applied to consumer electronics. And components, too, would have to withstand the rigors of the road and the harsh outdoors. Sony isn't going to be able to do what Tesla did, the hurdle is too high, said Nakanishi, adding that an easier road for the Japanese company to take would be to outsource vehicle manufacturing to the likes of Foxconn. Sony has yet to say if or how it would build a branded car, but it has already recruited an established carmaker to produce its prototype EV, partnering with a factory in Austria owned by Canadian auto parts maker Magna International, that builds cars for firms including BMW, Mercedes-Benz and Toyota. Other members of its Europe-based project include German auto parts maker Bosch, French automotive technology company Valeo SE and Hungarian autonomous vehicle startup Amotive. While the EV market is still small, sales growth is outstripping that of fossil fuel cars and Tesla is benefiting most in terms of the value investors are putting on it. Tesla's market capitalization is now around 4 times that of Toyota Motor Corp., even though vehicle output by the US firm is only a tenth of the world's biggest car producer. Legacy carmakers such as Toyota, General Motors Co., Volkswagen and Chrysler owner Stellantis are beginning to fight back with plans to invest hundreds of billions of dollars, which will add to the competition for tech firms such as Sony. For some technology companies, the lure of EVs has already been dropped, outweighed by the risks. Bagless vacuum cleaner inventor James Dyson scrapped his electric car plans in 2018 because of the complexity of putting a vehicle on the road. And Panasonic Corp., Sony's fellow Japanese consumer tech competitor, has also eschewed mass-market EVs, although automotive components, including batteries it makes for Tesla cars, are now a major sales driver. Panasonic is not considering the production of Panasonic-branded EVs, a spokesperson said. Qatar Airways is claiming $618 million in compensation from plane maker Airbus in a dispute over erosion to the surface of A350 jetliners, a court document showed on Thursday. The Gulf airline is also seeking extra compensation of $4 million for every day that 21 of its A350 airplanes remained grounded by Qatar's regulator over the skin damage, which includes erosion and gaps in a layer of lightning protection. The European jetliner's largest customer launched the claim in December, saying Airbus had failed to provide a full root cause analysis needed to satisfy its questions over the airworthiness of some 40% of its A350 fleet. Airbus said it understood the cause and would deny in total the airline's claim in a division of the High Court in London. Airbus restates there is no airworthiness issue, a spokesperson said, adding this view had been confirmed by European regulators. Qatar Airways had no immediate comment. The companies have been locked in a row for months over damage including blistered paint, rivet-related cracks and corrosion to the sub-layer of lightning protection. The row escalated in November when a Reuters investigation revealed at least 5 other airlines had discovered surface flaws, prompting Airbus to set up an internal task force and to explore a new anti-lightning design for future A350 planes. Mombasa, Kenya. China's Foreign Minister Wang Yi on Thursday rejected suggestions that Beijing was luring African countries into debt traps by offering them massive loans, dismissing the idea as a narrative pushed by opponents to poverty reduction. Wang, speaking ahead of touring Beijing-funded infrastructure projects in Kenya, said China's considerable lending to Africa was mutually benefiting and not a strategy to extract diplomatic and commercial concessions. That is simply not a fact. It is speculation being played out by some with ulterior motives, he told reporters in the Kenyan port city of Mombasa. This is a narrative that has been created by those who do not want to see development in Africa. If there is any trap, it is about poverty and underdevelopment, he said, speaking through an interpreter. Wang's three-nation tour of Eritrea, Kenya and the Comoros follows a trip to Africa by U.S. Secretary of State Antony Blinken in November that in part aimed at countering China's growing influence on the continent. China is Africa's largest trading partner, with direct trade worth over $200 billion in 2019, according to official Chinese figures. China is Kenya's second-largest lender after the World Bank and has funded a number of costly infrastructure projects that have raised concerns about Nairobi taking on more debt than it can afford. In Mombasa, Wang held a closed-door meeting with a team of government ministers and signed agreements on trade and investment, health, security, climate change and green technology transfer. He later met President Uhuru Kenyatta and visited the port of Mombasa, where China is constructing a new $353 million terminal to allow larger oil tankers to berth. The visit is a testament to the deepening of relations between the two countries, said Kenya's Foreign Minister, Rachel Omamo. Beijing funded Kenya's most expensive infrastructure project since independence, loaning $5 billion for the construction of a railway line from Mombasa opened in 2017. During a visit to Mombasa in January 2020, Wang described the railway as a benchmark of China's Belt and Road Initiative, a $1 trillion push to improve trade links across the globe by building landmark infrastructure. But observers have raised red flags over Kenya's reliance on Chinese funding, warning that debt was soaring to unmanageable levels. Ali Khan Satchu, a Kenyan geopolitical and economic analyst, said the East African nation was at a disadvantage negotiating deals and often stuck with high-interest repayments. These investments are not going to make a return on investments for the foreseeable future, he told AFP. You have taken out these loans, and they are making losses every month. You are essentially increasing the problems. Beijing's lending spree has slowed in recent years as borrowers have pushed back on terms and the coronavirus pandemic has inflicted economic pain. Satchu said China was shifting focus from infrastructure to greater trade, and saw promise in deepening ties with Indian Ocean economies. The Chinese are trying to recalibrate their relationship with Africa, with a lot of emphasis on agriculture and lending to the private sector, he said. Wang has already visited Eritrea and after Kenya, heads to the Indian Ocean island nation of the Comoros. London, the US dollar took a breather in its climb towards a 14-month high on Thursday, after riding the tailwind of minutes from the Federal Reserve's December policy meeting which bolstered expectations of a US rate hike as early as March. The meeting minutes showed officials had discussed shrinking the Fed's overall asset holdings as well as raising interest rates sooner than expected to fight inflation. Money markets are now pricing nearly an 80% probability of a U.S. interest rate rise by March and more than 80 basis points of cumulative rate increases in 2022, a huge shift in expectations as only 3 months ago investors were not expecting the first U.S. rate hike until the summer of 2023. Elsa Lignos, head of FX strategy at RBC Capital Markets, said that while rate hike expectations for 2022 have propped up the dollar, the possibility of more rate hikes for 2023 could provide further strength to the currency. The consensus narrative seems to be the Fed will over-tighten in 2022 and be forced into slowing down materially in 2023, she wrote in a note. We think it's a repricing higher for 2023 which has the most potential to boost USD this year, and we are watching this as a key driver for the dollar, she added. At 12:20 GMT, the dollar index, which measures the greenback against major peers, was unchanged on the day at 96.17 after creeping up closer to a 14-month high of 96.93. The greenback nevertheless made substantial gains against some rivals like the Australian dollar, which at one point lost more than 1%. The Aussie gradually recouped some losses, stabilizing down 0.7% at $0.717. The yen also limited its losses from a high of 116.18 per dollar to 115.84, down 0.23%. Sterling traded down 0.13% at $1.3538, having retreated overnight from the $1.3599 level, its highest in nearly 2 months, following the Fed minutes. The euro stood broadly unchanged, slightly above the $1.13 mark as it continued to consolidate in the middle of the trading range in which it has sat since mid-November. Cryptocurrencies were among the hardest hit in the overnight market sell-off, with Bitcoin nursing losses below the $43,000 levels after falling more than 5% overnight. Bengaluru, Reliance Industries Ltd's retail arm has invested $200 million for a 25.8% stake in Indian online delivery platform Dunzo to get a foothold into the rapidly growing market of super-fast dispatch of household goods. Billionaire Mukesh Ambani-owned Reliance Industries said on Thursday its retail arm led a $240 million funding round in Bengaluru-based Dunzo, which offers lightning-fast delivery of groceries and medicines, and even offers to pick up and drop off documents and other items. Demand for services like Dunzo and SoftBank-backed Swiggy's Genie has boomed during the pandemic when people were ordered to remain indoors and only delivery of essential items was allowed. This massive demand has also led players to intensify their battle in ensuring users are able to get their orders in 15 minutes or less. Dunzo, which counts Alphabet Inc.'s Google and Lightrock among its backers, will use the funds to expand to 15 cities from its current 7-city operation. Last month, Grofers, which offers online delivery, rebranded itself as Blinkit with a promise to speed up deliveries. The company makes 10-minute drop-offs to customers with the help of more than 100 partner stores or warehouses in 8 cities. Reliance has been ramping up its JioMart e-commerce arm in an effort to stave off competition from Amazon.com and Walmart Inc.'s Flipkart in an e-retail market India forecasts will be worth $200 billion by 2026. Last year, Reliance also offered mom and pop stores, known as Kiranas, the option to order goods on JioMart partner with deliveries promised within 24 hours, circumventing the usual route of going through salesmen representing consumer giants. Paris, France's data privacy watchdog CNIL said on Thursday it had fined Alphabet's Google a record €150 million for making it difficult for Internet users to refuse online trackers known as cookies. Meta Platforms Facebook was also fined €60 million for the same reason, the CNIL said. Internet users' prior consent for the use of cookies, tiny snippets of data that help build targeted digital ad campaigns, is a key pillar of the European Union's data privacy regulation and a top priority for the CNIL. When you accept cookies, it's done in just one click, said Karen Kiefer, NIL's head for data protection and sanctions. Rejecting cookies should be as easy as accepting them. In its statement, the watchdog said it had found that the Facebook.com, Google.fr and YouTube.com websites didn't allow the refusal of cookies easily, citing Google's video streaming platform. The CNIL said the two companies had 3 months to comply with its orders or face an extra penalty payment of €100,000 per day of delay. These include the obligation for Google and Facebook to provide French Internet users simpler tools for refusing cookies, in order to guarantee their consent. The CNIL said that while Google and Facebook provided a virtual button to allow the immediate acceptance of cookies, there was no equivalent to refuse them as easily. People trust us to respect their right to privacy and keep them safe. We understand our responsibility to protect that trust and are committing to further changes and active work with the CNIL in light of this decision, a Google spokesperson said. Facebook did not immediately respond to a request for comment. NIL's previous record fine in 2020 also targeted Google and amounted to €100 million. At the time, the CNIL found that Google's French websites didn't seek the prior consent of visitors before advertising cookies were saved on computers and failed to provide clear information about how it intended to make use of them. Kiefer said the issues have been resolved since then. In 2020, the CNIL strengthened consent rights over ad trackers, saying websites operating in France should keep a register of Internet users' refusal to accept cookies for at least 6 months. It also said Internet users should be able to easily reconsider any initial agreement concerning cookies via a web link or an icon that should be visible on all the website pages.